The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Thursday. This is Thursday, the 23rd of May, almost wrapping up the month. We're looking at the Dow futures after NVIDIA's blowout earnings, and then the Fed. First of all, the Fed spooked the market, and the Dow pulled back quite sharply. The others pulled back a little bit. The QQQ has actually made higher highs. But NVIDIA's blowout earnings is really giving the market quite a boost, and we're looking at the S&P. So let's go to the Dow first. The Dow futures right now are up 79 at 39,862. The Dow closed yesterday. The Dow closed yesterday down 200 points. Just getting this ready. There it is. The Dow closed down 200 points, forming that peak D from the 40,077 level. But that weekly chart made a new high in this cup formation. And then you've got the Dow monthly, which is in a leg D. Remember, the Chapman wave, the objective is to go from a buy signal, see it upgraded to a buy mode, and then whatever the price is you're following, whatever the symbol is, should go to at least a D. Well, in this case, you've got your D in the monthly chart of the Dow. The S&P closed yesterday, right here, closed at 5,307, just underneath the 553.25 high that was made 3 days ago. And the weekly chart, all the 9-period moving averages are very strong, still very strong. And yet the futures right now, because of NVIDIA, spiraled high at all-time highs at 5,365, up 37 points. Let's see what NVIDIA is doing right now. NVIDIA, this is now at 8:08 in the morning Eastern time. NVIDIA closed yesterday at 949. Today it's up at 1,014. This is up 64. 64. Well, it's jumping around, and that's a spectacular move. The 974 high that was made. That, remember, we're looking at those round numbers. Gave this fantastic sell signal. Went all the way down to a round number close of 962. It did hit 956.06, and here it is at 1,000 points. Well, it's over 1,000 points. And you're finally getting we'll see what happens at the opening, but right now it looks very much like you're going to get your leg D in the monthly chart. Let's go to the QQQ. Well, first we'll do the NQ. The NQ at an all-time high as we speak. It's trading at 18,997. Very strong leg E right there in the daily chart. The F, and this is a new A, but I'm calling it an F for now in the weekly chart because the 9-period moving average is still strong, and it's got to a leg D in the monthly chart. The QQQ, slightly different. It's actually extending a leg F. Had an all-time high yesterday, well, last couple of days, and today it's up 5.22 at 460.93. That's where the SMHs are. SMHs are that's recycled. You got an instant restart. This is I'm going to call a G/C. It's trading pre-market G/C at 243.91, up 7.32. That's a new all-time high, and you're going to get, by the open, you should be getting a leg D in the monthly chart. Ooh, isn't that interesting? Let's go to the IWM. IWM actually held very well yesterday, even though it pulled back. It held the 14-period moving average, closed just under the 9. It's trading up now 1.17 at 207.75. 209.77 is the number to take out as resistance. But I was impressed overall yesterday that the Russell 2000 small caps did participate on the downside, but actually held very well. And it doesn't look like a great candle, but I like the way that it held. The MACD is still good, and the Let's see. Yeah, the stochastics at 87%, on balance volume pullback, but the 9-period moving average is still well over the 14. Now we need to go to gold. Gold is continuing the down move. It's down 22 at 23.70. The silver is trading also down some. It's trading down 61 cents at 30.80. Right on the 9-period exponential moving average. We'll see if that 30.009 is the level to hold in the 14-period moving average. So just a digestive phase in the gold and silver. Well, let's go to high-grade copper. High-grade copper had quite a pullback yesterday. Today is still down 0.01 at 4.83. Just a digestive phase, but it's D, peak D in the daily, leg D in the weekly, and leg D in the monthly chart. This could turn into a Chapman wave Roman candle, but we've still got a couple of days to go before we see the month of May close. I need to go to the dollar, DXY. So the dollar is down 20 cents, 20 ticks at 104.73. The pink 9-period moving average was trying to improve. We'll see what happens by the end of the day. But if the pink 9-period moving average crosses over the 14, that'll be quite impressive, because that'll say that the dollar has been pulling back from the 106.40s down to the 104.20s, and now it's trying to rally. And we'll see what it does, because that weekly chart is starting to making higher highs and higher lows. But this decline, 1, 2, 3, 4, 5, it's extending a little long in the weekly chart for the downside. Let's go to the EUR USD. That is the euro-dollar currency pair, up 0.003 at 1.0852, holding the 14-period moving average, still green 9-period moving average. Let's see what the USD JPY does. That is the yen. Not much, just down 24 cents at 156.56. Made that peak F and is trying to fill in to the upside, but it's kind of stalling right here. But it is a peak D in the weekly and a leg D in the monthly. I need to go to bonds, and that's going to be so important. Bonds are trading down up 630 seconds at 117.5. Look how it's been stuck, but it hasn't broken down, it hasn't broken up. It's just steady. We've been looking at that for a little while, saying that the bond yields are in the higher range, but really just steady. As long as they're steady, that's good. We'll see what happens, because if the 30-year T-bond continuous contract trading at 117 and 16/30 seconds starts to trade in the next week, slips under 116, that's going to be a problem, because that'll push yields up. But if it's able to get to 118, just over 118, that's going to help a lot. So I needed just to go to I wanted to show you something very interesting. Look, applied materials, AMAT, up 580 at pre-market at 223.95. Monthly chart, leg E, all-time high. Weekly chart, leg D, all-time high. And this could be a leg F to the upside in applied materials. Look at that on-balance volume pullback, but the MACD is holding well. I'll be right back. Basil Chapman, early edition. We've got the Dow futures up 88. I'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Good morning, everyone. We're back. Basil Chapman. This is the Tiger Technicians Hour for the early edition at 8:18. We played right now. Minutes we played at 10:18. So we're looking at the Dow futures, the E-mini futures in the 1 minute chart made a peak. It's pulling back a little bit. The green 9-period moving average is very close to turning pink. The 5 minute chart, think of this as a daily, but it's a 1 minute. Think of this as a weekly, but it's a 5 minute, has gone to a leg E. It's still a leg until the full bar completes and it's making a lower high. And this is a leg D in the 10 minute. Think of this as a monthly, daily, weekly, monthly, 1 minute, 5 minute, 10 minute. Now, what's really interesting at this particular point is that let me just get to this right now, that the volatility index yesterday, and this was kind of a clue that something a little different was happening. The volatility index, the VIX, look what happened. So the Fed comes out with Fed speak, and there's this little bit of a pop, and all it did is it went from like the 1230-ish area, and it went to maybe 1276. And now look at it. It is down in the 11.62 range, down 67 cents. That gives you a sense of the buying pressure that's been coming into the market. And if you're looking at this as the daily chart, this is the weekly chart. There was that whole Iran-Israel deals. That's when the attack, Iran's attack on Israel was. That's around about the 19th, the week of the 19th of April. And the yields, the VIX index spiraled up to 21.36. It's almost cut in half. And look at this, the weekly chart. And let me just show you this because it's almost like a lesson in volatility as it relates to market uncertainty. Look at those big spikes. Coronavirus back in March 2020 at 85.47. But actually what's happening is we're making lower lows and lower highs, and it's been continuing. Look at this month of May bar. This is a monthly chart. And I had drawn in some time ago, I drawn this line in to say that's kind of the support area, and then this gray line, this kind of grayish line right there. And every once in a while we can go down, go to the single digits, but at some point there's going to be a spike how the spike holds or doesn't hold. And you can see with the nervousness of investors that it doesn't stay very high for long, the volatility, which is a measure of fear. So it pops up and then it keeps coming down. And now the market's getting used to the kind of normality that there's a Middle East war, that there's and this is going to be very important, that at some point we were looking at the possibility, with the Suez Canal closed, all these sorts of things, that crude oil would spiral higher and higher and higher. Well, look, crude oil is just stuck in the 70s. It's at 78.22, up 65 cents right now. So that's one thing. So I want to just put into place how the market for a very long time has essentially ignored the whole aspect of fear. There are momentary pauses and the market suddenly pulls back, but mostly, certainly with the Fed speak and with anything to do with the economy, we get just a single leg down, a sharp look at this. Here's the Dow right here. And you get those sudden bouts of selling pressure. And that was like April into the third week of April. And then it's all down. Just two big ugly candles, and then it moves up. So the relationship of how the market's dealing with the Fed talking about yields, and they can't at this particular point. They say they can't see any relief in the inflation, although we can see it if you're looking at the grains, etc. But they don't see it, and as a result, the TLT, which is up 20 cents right now, is in this down channel. It's in this inside track repellent zone. At some point, probably, I don't know exactly when, but I'm saying sometime maybe even this summer, you will start to hear talk about yields coming down again, I'm sure. But in the meantime, this is the pattern that you're looking at. Lower highs and lower lows, and that is the TLT, meaning higher highs and higher lows for the TBT, which is basically the ultra-short Lehman 20-year Treasury bond ETF, which is also the yields, and there it is. And if you're looking at the TNX.X, that's the 10-year, you can see the yields have been coming down, but they've kind of stalled. But they're in the upper range. I drew this in some time ago for subscribers. I said, I think we're just stuck in this range. Nothing serious, but it can have momentary effects. And look, we've just been in that rectangle between, let's call it 50 and 38. And here we are at 44, right in the middle. So I don't think that that's a big issue. So a couple of things came up. Could I look at, let me get to this now. I'm sorry, I can't see Tiger TV questions there. I'm sorry about that. Next week I'll be back in the office and we'll be able to see everything. So this is what I want to look at. So we looked at Apple and we said, wait a minute, Apple has been, where do I get Apple? I typed in the wrong place. Apple, there it is. We looked at Apple, and Apple has been going towards the higher end of its range. The all-time high back in 2022 was 182, plummets down to the 120s, comes all the way back to the most recent high of, actually yesterday. And it goes to 190, in the 190 area, 192, I think it was. I'll give you the exact, 192.82. Very nice action. The MACD is holding well. And I don't know why I'm not getting this. Oh, don't tell me. Oh, that's interesting. How did that happen? So let me go, if you don't mind, I'm going to take a moment. It's going to go space to the right. 0. I'm not even sure that happened. I usually have 7 spaces. There we go. Oh, okay, now I can see it better. I always like to have a little space here because it gives you some imagination of what can happen next. So Apple's holding well. It's up 51 cents at 191.81. About Avagio, I was asked, could I just have a look at it? It's up 33 at 14.25. It closed at 13.92. Well, 14.25 is still underneath the 140 5.40 high. This is Broadcom. The symbol is AVGO. Acting really well up in the higher range. I've got an alternate count in the monthly chart, G/C, so this is still very strong at this particular point. And you can just go on and on and on with these different ASLM, oops. All right, let's skip that one. Let's go to AMD. That's Advanced Micro Devices. That is up 5.35, but out 7.35. But it had a high back in 28. 227.30 was the high back in March, and now I've pulled back quite sharply. I'll be back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Hi folks, we're back. Early edition of the Tiger Technicians now at 8:30 this morning a.m. We've got the futures. I guess there must be some news coming out, or it's just about to come out. They moved very sharply in the 10-minute chart. It's in leg D. In the 5-minute chart, it's in leg F. And we're looking at the 1-minute chart, still with the green 9-period moving average, and it's holding very well. Is it going to? I don't know what the response is, and I can't remember exactly which economic report is coming out, but we just look at the response of the market. We'll come back to this in a few minutes, and we'll see whether or not it's holding well, up 39 at 5367 in the E-mini, and I'm going to go to this chart. So I was asked about Shopify. So look, Shopify had a spectacular move going to its all-time high back in 2021 in November at 176.29. Well, it came down pretty sharply to 23.63 in October of 2022, and it's gone to a peak A and then a peak B and finally a peak C, but way underneath the previous high. And here it is. It gaps down early in May. It suddenly gaps down and is trading at 58.70. Question is, when would a good time to start a position in Shopify be? And I'm just looking at this, and I don't see anything yet. I would much rather see some upside. I'd give up some points to see upside action, whereby the 9-period moving average, which is pink and at 59.83, maybe not wait for it to cross green, but get very close to the 61.71 level. That's the price of Shopify. It's up 50 cents pre-market at 59.20. This is, I'm just saying that I would probably err on the side of stepping aside. This is a stock that should, Shopify and customized online store platform, this is a stock that should come back at some point. But it's got a lot. Look at that ugly candle. When I see a series of big red candles, it means that the weight of evidence is to the downside. And until it really repairs that damage, at least in the base, in this case, the 200-period moving average at about 64, it needs to at least attempt to get there. It's at 58.70 right now. I'm just saying, step aside. Next question came in about, let me see, when was this? Yes, GE. So GE has been a spectacular stock, absolutely marvelous stock. It's trading right now, pre-market, up 35 cents to 161.16. It made 170.80 top at a peak F, but I haven't yet been able to put a down arrow. I need at least another day, probably underneath the 9-period moving average. That's a pink line right there. And at this particular point, the monthly chart, everything looks really positive. It's in a leg D. Weekly chart is an alternate count, F/B. 9-period moving average is very strong. GE is a different matter. Now, GE, if you have the patience in the next 3 to 4 weeks, I don't know if there's going to be that, but if GE is able to test this gap, and I had this as a potential alternate count, it's at 160.81. If we can get very close to 152 to 150, I would say that that's a really good entry point. So another question was the ETF for the AI, the artificial intelligence. That's AIQ, the Global X Artificial Intelligence ETF. I haven't been able to write this down. It was basically, I've been long for some time, and I would like to add. Well, we too, for the opening call, we've been long for quite some time. It's trading at 35.03, up 67 cents pre-market. That puts it, that's just pre-market, remember, puts it at an all-time high. If we can trade there anywhere above the 34, I believe it's this high right here, 34.54. Anything above 35.54, and am I correct? 34.54, I'm sorry. Anything above that says, yep, all-time high. So I would hold off on this, even though it's acting really well. The 9 is over the 14, price is over the 9, stochastics at 95%, AIQ is a symbol, and the weekly chart made this M-shape formation. All of this is good, and it's only a leg C in the monthly chart. It should still go higher. So if you're in it, I wouldn't want you to put, well, let me just check to see what's happening over here. Holding steady. So, yep, whatever the news was hasn't affected the market at all. That's important. So the E-mini is now a little higher. It's up 40. Yes, what I would say is you could have a quick trade. I don't think you wanted a quick trade. that means that if you were to put money in now at 35.03, just right at an all-time high, I can see some further gains, but I can also see that over a period of a few weeks, there's a good chance we're going to test the 33 area. So I would hold off on this as well. Now, there are some stocks that are quite a bit lower, and I wanted to check out, this is Zscale. This is a stock that had a spectacular move. It went all the way to 300 and something. Where is it? Zscaler had a high of, in November of 2021, 376.11. It comes tumbling down to a low, and that low was in ZS is a symbol of 84.93. And then it had a wonderful run all the way to about 260, just under 260. Comes back to the 200-period moving average here as well. This is a situation where, yes, it's great to be looking at stocks that have had spectacular moves and now they pull back sharply. But at the same time, I don't get a sense of a base. Look, there's a lowercase h that broke to a lower low. Chapman wave Roman candle closed a couple of times above it. That's good. Then it usually comes back into the candle. Now, here again, Zscaler trading at 176.04, up $1.88. I just have to say, hold tight. I wouldn't do anything. So I want you to go to Ford. Ford is trading at 12.11. There's the same pattern. Lowercase h makes a lowercase m, making lower lows and lower highs. I'd step away from Ford for the moment. It was a GM. Yeah, GM, we two together was asked about, not yesterday, but the day before. GM is up 32 cents pre-market at 44.29. It had a really good rally from the 26 area all the way to the 46s. It did have a round number at 46, not the high, but a round number. And it's trading right now in the 44s. This one is a better looking chart, but even then, I'm just going to say right at this moment, I'd be a little careful. This is very select right now. I wanted to go to the XLK. XLK is the, XLK, there it is. XLK is the S&P Select Tech Spider Fund. That is trading up to 217.88 at an all-time high. What is it doing? It's in a leg D in the monthly chart. And it's either a brand new move to the upside, but it's broken resistance in the weekly. Good action in the XLK S&P Tech Spider. I'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the US futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi, folks. Basil Chapman. This is the Tiger Technicians Hour early edition. Let me just go to the Dow futures. So they're up 19. Had a pretty ugly candle yesterday. The 9 is still over the 14. That's still good. The MACD is still strong. Stochastic still good at 86%. On balance volume has pulled back. Relative strength has been pulling back quite sharply for about 4 or 5 sessions, and it didn't quite make that previous high, 40,358. We're watching this very closely. So there's a bit of a divergence here. I wanted to also go to Bitcoin. BTC. Bitcoin is trading up 310, had a bit of a pullback from 3 days ago. It's in that resistance zone in the, see that trend line in the weekly chart. And we're looking at the GBTC, which is the Bitcoin Trust, up 22 cents at 62.70. It's at a peak C, and it should go to a slightly higher high, which means that it should test the 63.45, go 1 penny above it for a leg D, and that's going to change this pattern just a little bit in this Chapman falling axe. This looks like an expanding cone, a declining cone with upper lower trend line coming down, and then a much sharper trend line at the bottom, and that tries to make a cup formation, and they can go up and retest the highs. In this case, that's GBTC. I was asked about Ethereum. That is up $1.52 at 34.30. 34.30, I believe, will start at leg C in the daily chart. Very strong cup formation, a little lopsided cup formation. Let me just explain the chart wave. This is an A. Usually I'll make it a gray A because it's under the previous A and there aren't any signals. The stochastic's very weak at 26%. MACD hasn't crossed positive. So the moment it goes above this high, that A changes and goes to an F, just to make it as simple as possible. And that D will become an E if there's a higher move above that 35. What did I say it was? 35.67, 35.66. Starts that alternate count. So here we go. Did that. Question about ExxonMobil. Here we go. ExxonMobil traded down sharply. That was arch formation. It's like the dreaded H pattern. Is it going to retest the 114 low that was made just recently? It's at 115.70 up 22 cents. It kind of looks like it. It just looks like in the monthly chart that it's just having a digestive high-level consolidation. So at this particular point, if ExxonMobil, XOM is a symbol at 115.70 right now, if it starts to trade under 113, I think that's a change of character on the daily chart, but the weekly chart would need a much lower low to go to have that green 9-period moving average turn pink. Then it came a question of triple M, 1, 2, 3, there we go, triple M. This is very interesting because it had a really nice move to the upside. And I typed in here quite some time ago, triple M to 101s by June. Well, it got there. That was on May the, right there. So that was May May the 13th, it went to 101.74. Now it's at a peak F in the daily chart, starting to pull back down 61 cents at 100.88. They have taken one part of their company and they've spun it off. So that's why you've got notation right here in the monthly chart, way up there. But actually, it should be nothing's changed here in terms of the notation, other than the price, because I type it in, it's not automatic, is up above. But you can see this weekly chart, the monthly chart has got a nice leg B. It could pull back to maybe the 96, 95 area. And this would, if it can move into the 108 or 109 area, that pink 9-period moving average in the monthly chart will, for the first time since it was up in the 150s back in January of 2022, when the 9-period moving average went from green to pink, and that's been pink and it's still pink. And but look at the weekly chart, struggling a little bit, trying to get to 110.28, the 200-period moving average. So this might be a little digestive phase that we're looking at. So that's Triple M. Microsoft is at an all-time high at 434.50, up 3.98. We haven't actually added to it for a little while. We've been long, and we've also had trading positions, which have done nicely, but sort of left it alone to see how it would digest the sideways move that it had for a little while. But there it is in leg D in the weekly chart, leg E in the monthly, and a very quick D to E in the monthly chart says that it could be an instant restart, but you're going to have to monitor this very closely. So here we go. I'll do that right there. I always do that just to show you that there's a chance it could have another 3 higher peaks or 4 higher peaks. But it's a work in progress at this particular point, acting very well. A question came in about, was that yesterday or the day before? I saw it too late. Oh, about IBM. IBM had a fabulous move. Look at this monthly move going from, let's go to the 120s last year, and it screams up to almost 200. It goes to a high of 199.18 in March of this year. And it's had a big pullback and a gap down. Now it's trying to fill the gap. Now the question came in, as I recall it, it was, would you consider that IBM, you had spoken about it as transformative, as if it's morphed into a completely different company now. It's more involved in AI and the cloud. And I would say, yes, I believe that's the case, but it was such a spectacular move that it's just taking some time to digest these gains. So would I add to this? Would I start a position in IBM? I think there are better stocks right now. I think Microsoft actually is one of those that's just in a better position than IBM. So I'm going to carry gain, say no. The other question came in was Newmont Mining. Newmont Mining trading, N-U-E, Newmont Mining. No, I didn't do that, did I? Okay, so I have to go, oh no, that was a big mistake. I can't go back because I haven't saved that. I remember now what the issue is. I'll have to do this during the break. But no, Newmont Mining is the same thing in the steel sector. In the steel sector, you've got U.S. Steel, which had a spectacular move because it was a takeover candidate, and that fell through, and it's dropped very sharply. Nucor Steel is one of the really great steel companies, and it's pulled back very sharply, a peak E up in the 200-something area. Now it's at 171. I would hold off on that, and I hope I remember how I'm going to get rid of this, because I hit something, and what it does is, oh, it's the candle. That's right. So let me just do this. I'll do this through the break. I'll get it right. That's simple. I'll be back in a moment. Basil Chapman, Tiger Conditions Hour, early edition.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the US futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
So hi folks, as we're going to the last segment, I'm going to cover what I'm looking at for the day. Just messed up my daily chart. I'm going to have to do something about it. But in the meantime, what we're looking at is within the context of, let's call it 12 o'clock to 2 o'clock. If the SMHs hold the gains, and they're up 8 right now at 244.80, what we're looking at is there might be a divergence between the semiconductors, the QQQ. Remember, it's really important that these things go together. The QQQ trading up 5.6 at this moment at 461, and the jobless numbers were slightly weaker, so that it means that you're not getting an increase in jobless numbers. Maybe that's why the market just momentarily looked at it and said, whoops. But in the meantime, what we're looking at is if the Dow is holding, let's go to the S&P. If the S&P is holding at this particular point, it is, let me get this right, yeah. That's the best way to look at it. If the S&P, which is trading in the futures up 36 or 40 points, if the S&P is holding to a plus 16 or more after 2 o'clock, especially if it's more, that is really good action. Those 9-period moving averages are all very strong. They're holding very well, and that's a big positive. If there's a divergence between the Dow not acting as well, it's only up maybe 60 points instead of 150 points following the general market, that divergence will spill over into next week, and that's when we're going to see whether or not these huge gains in the semiconductors overnight into this morning are going to be kept. Yes, it's fantastic that the earnings were good, but let's see how the market responds. And I will also say that if the dollar starts to rally, you got to watch out a little bit for some kind of weakness. But so far, everything looks very positive, and we'll see how the day closes, because you want to see the market go through a whole cycle of the morning, then midday, and then what happens in the afternoon. For the next show, which is the morning market kickoff, and I will do the news, and I'm out.